How's it going, everyone? My name's SDFC. I am a day trader, and it is my objective to teach everything I've learned in my time in the market, um, basically in layman's terms. And I just like to give a brief overview about myself. I'm very passionate about trading. This is my main source of income, and I do enjoy the fact that it is completely performance based. So in terms of relying on how much I make, it's completely dependent on my performance. This is going to be a channel that I am currently starting, and I'm in the works of it right now. This will be the first video, but just to give a brief overview, mainly I'll be talking about SPY and QQQ. I'll be breaking down those charts for those ETFs, exchange traded funds. Um, and in my personal take, I like to trade stock options in these. I think that the risk to reward ratio on them, and in terms of leveraging how much I can profit and leveraging how much I could hedge initial positions in the market with stock options is something to look into, especially if you're getting into trading and you're looking to make a decent amount of money in terms of short time intervals. Um, but yeah, overall, I'm just very excited to get this channel started. For this video, I'll be breaking down everything that happened with QQQ and everything that happened in Nvidia today. Those were the two main trades I made. I'll pull up on the screen just to give a little flash on exactly like how my trading day went today. Overall, this week wasn't pretty good. I can be as transparent as I want about my performance this week. Um, this is my Discord if you guys are interested in joining. We got a good community here. Everyone's here is pretty chill. Everyone here is, I'd say, someone you could trust. But just to give a view on my performance today, I noticed initially, and I was kind of expecting from just the general liquidity sweep and how bullish we were on the week overall, that there would kind of be a downtrend market open today, and I capitalized on that. I got 4 contracts of SPY, and I pretty much doubled down as soon as it dropped for the second time, and I got like 2 more day contracts on it, and that ran me a bag, which was nice. In this Discord, you'll meet a lot of people. There's a lot of people from the app After Hour, which is something I recommend checking out. If you go on your phone, like anything Android, iOS, After Hour is something that's pretty much equivalent to, I'd say, like the Twitter of of uh, of trading. You can link your portfolio. The owner of the app is on my Discord. I like to give a shout out to Sir Jack. He's a very awesome guy, and he's very awesome for making this community for us. But everyone on this app has been pretty chill. Most of the following on my Discord and most of the ideas I've gotten, and specifically the idea for having a YouTube channel, has been from the community of After Hours. So I'd like to shout out that community. Um, but yeah, that's just a brief overview on what you'll expect for this channel. So yeah, let's just get right into it. We go on TradingView Market News. We can kind of get an overview of like just what kind of happened in terms of our economy today. I can pull up FinViz, and we can pull up a heat map so you can just get a rundown of pretty much what our economy looked like. Overall, it just seems pretty flat. We got a lot of companies that were on like the upside slash downside within the 0.10% range, which is considerably flat. Wouldn't be surprised if most of these companies had like swings, but then at the end of the day, it just consolidated right where it opened. Like for example, you can see Meta. It dropped down. I'd assume just from that look, it dropped down probably like 0.6%, and then it swung like upward midday in terms of core trading hours, picking up volatility, swinging back to where it opened, just a 0.01. That's like a perfect example of what you could assume the overall market doing. This is a heat map of the day performance. Everything here is the S&P 500. If we want to look at what our world economy is doing, China's just overall in the red. Their highest market cap, Alibaba, the e-commerce website that helps B2B businesses like get their supplies in a wholesale price so they can get the discount on when they sell it for retail, right? So overall, the Chinese market seems to be down. The Taiwanese market seems to be down just a little bit. I'd say it was pretty much flat in terms of the semiconductors. I'd say, if anything, the performance of the semiconductor company, Taiwanese Semiconductor, which is an ADR, I'd say it did fairly okay. It opened far below the previous day close, but it trickled back up closer to the previous day close, as you can see on that chart right there. But I think everyone's more interested in what's going on in our economy. Microsoft closing in the green, Nvidia closing in the green, and I don't know if you remember, but the contracts I showed earlier were Nvidia. I had those expire for me in terms of stock options the 21st of this month, so I have an entire week till next Friday to let those ride for a pretty good play, I'm hoping. Yesterday, just to give a brief overview, um, just to preface, right? When it comes to stock options, you're not really going to be 100%. If anything, you could lose your entire portfolio if you don't know what you're doing. I'm going to eventually have a playlist of what I do when I enter the market and before I enter the market, strategically, fundamentally, technically, and just how I'd look at things to watch in terms of just mutual funds, specifically for SPY and QQQ. SPY being an indice that tracks the Nasdaq, and I mean SPY. Correct me, sorry. SPY being an indice that tracks the S&P 500, and QQQ being an indice that tracks the Nasdaq, right? So let's just get right into it. Today I'm only going to be looking at technicals, and we can kind of just get a brief overview of what was going on, right? So I can replay the day, and during this replay I'll go to what you can kind of see what happened, right? So what I like to use just to get started, right? We're gonna start at pre-market for the day. Before I start charting up pre-market for the day, we can go to the 5-day. This is something I like to do technically. You can kind of see where zones of liquidity sit, and you can kind of get a range, right? You can kind of get a range of where price has been moving in terms of the 5-day. And this is a 5-day range. Looking from the 5-day, we can kind of see that we've been on a very bullish bias. A lot of news came in this week, especially Thursday. You can kind of see over here that Thursday was very flat, and we kind of closed the day out right where Thursday closed. Right, yeah. Wednesday actually was pretty flat as well, but I'd say Thursday was just as flat. There kind of wasn't any movement, and you can expect that with an indice that tracks an overall market, right? The portfolio is completely diversified. You don't have to worry about swings that can just wipe you out in the course of minutes. So on the upside, it's risk adverse in terms of stock options when you're trading a performance index or indice, right? I don't really care how you pronounce it. Moreover, um, it also can screw you over since it doesn't move that much, because you could enter a position, say market open, and it can trickle down and just consolidate down. And regardless of it just losing, say, a few bucks on your contracts because it's trickling down, there are many things in the options market that are priced in working against you, e.g., something called theta decay, which is the amount of principal slash premium you pay to the the person who you bought the contract from, and I'm pretty sure that's premium. And then on top of that, you have to deal with implied volatility, which is very different than realized volatility, which you can kind of see on this chart. But I'm gonna get into that all in my courses that I'm gonna be uploading on playlists. But let's get back to just analysis on the week. So you have this bullish bias. You can see for the first portion of the week, we don't really see any range break going on. We can see how this bullish bias acts as a support, even though there are multiple occasions where price is testing it overall. But I'd say overnight on Wednesday, you can see QQQ break its range, which is very nice to see, given that if I pull up a 1 month, right, you can see that it's been resting in a range where we can draw the top of the range being where this week was, and then we can draw the bottom being where this big V movement occurred. And I remember going over last week with anyone who's in the Discord watching how consistently last week, after a complete week of consolidation, like the previous week, we saw these consistent V moves, right? These V moves. And these moves, you can kind of assume are just temporary patterns that if anyone's up at like 5:30 Pacific or 9:30 Eastern, you'll be able to pick up on these patterns and you'll be able to see how price is moving pre-market, which kind of gives you an edge on the day. But the issue with that is you're always going to be tempted to get in early before confirmation or anything, simply because you're up a few hours before market open and you're just eager to get in, right? So there's also just a ratio of opportunity costs there in terms of if you're willing to get up early and if you're just going to wake up whenever and then just take a look at the market and see what levels are being made and historic data that's coming in through the data of the day that you can just draw levels on, right? So you can see the break of range occurring the past 3 days on this week. And what's nice about this is anyone was getting long here, or they had like for example, say for stock options, you have a June 21st contract on QQQ, and you looked at that Tuesday pre-market, you'd be in the bag right now. That's something that people like to see, especially with something that tracks our overall economy. Anytime you see a break of range, it lets you know that our economy is doing better. We got some news recently. I'm pretty sure it was Thursday. I'd have to look back on it. I'm just going off of my memory, but we had the 30-year mortgage rate economic report press release come out from the Fed, FOMC, and then we also had interest rates and an update on that from FOMC. So that gave us an indication on how our country's doing with inflation. Prior to those economic reports coming out, we had the Bank of Canada giving an indication of how the Canadian economy is doing. And on that day, you can kind of see how everyone in the world was bullish because, as far as I'm concerned, the Bank of Canada was the first country to give a report on interest rates. And everyone's, like every other country that was going to report after, was pretty much banking off of, okay, if Canada's doing well, we can assume that their economy is synonymous with the American economy, and if Canada's doing well, then we can assume that if America's economy will be doing as well, if not better. And then other banks around the world could just assume that, okay, we can put lower rates, if not hold the same rate throughout the course of the year. In terms of a projection on interest rates, in terms of our market cycle, the next interest rate report is going to come out in 3 months, I'm assuming. If you look on CME Group website, they have a timer for the next FOMC meeting. So that's a tool that you can use. I can show you right here on my thing on my start. I guess not my start, but nonetheless, let's get back into data, right? So you see this range that we've been sitting in past month, past 3 months, I could draw a zone right here on this big bar pre-market, because anyone who's trading pre-market, more likely than not, they're not your average retail trader, and they're more likely trading volume from institutions that are trying to get in early with their analysts giving projections on the day prior to market open, right? So there's usually a volatility spike that picks up pre-market that I like to observe, and that's kind of why I get up early. The indicators I have up, for me specifically, I like the fair value gap extension indicator on TradingView. I like the 24-hour volume. I also like volume flow chart indicator that also has its own relative strength index line that kind of gives you an idea of how strong supply and demand is, e.g., an imbalance between selling or an imbalance between buying. And then someone in my Discord also put me on the awesome oscillator, and it kind of gives you an idea of a a volume flow indicator, but it also gives signals on when you're going to see a bullish momentum. So if I can drag my cursor on this line, you can kind of see how this was bullish, but then you can kind of see over here it's bearish, and then it signals bullish, a very big bullish signal, um, right over here. So we're going to run through the day, and you can kind of get an idea of everything I'm looking at. This is QQQ. I'm only going to do QQQ today since it's my first video, right? And that was pretty quick. I did not have any clue that I was on 10 replay speed, so I'm going to trick it down to 1, and then that kind of just spoiled everything, but it's okay. I'm not tripping. These are 30-minute candles, and I'm looking to go quick with this. So I'll open one candle, right? That's the move there. So what I like about TradingView is it'll show you the manipulation. It'll show you what the candle looked like whenever it was forming at the beginning, and then the outcome after the 30-minute mark passes and it's about to form a new candle. So at the end of the forming of this candle, it creates this very bullish move here on the 30-minute. If I pull up a lower time frame, you can assume it was a candle that trickled a little bit downward, probably testing this order block flatting right here, but it didn't. It tested the order block prior that you can see with this whisker on the bottom of this candle. So I can draw a support line right here, assuming if I'm just trying to back test that it can potentially retrace back to this line, and recording, and I pretty much charted the entire day prior. Well, this entire day today, I pretty much charted that entire day. Not even realize it wasn't recording, so I'm pretty much gonna do it again. But it's gonna be unfair this time because I know exactly what happened, but it's whatever. So we'll just run through it again, right? So you see that manipulation wick happen first in the pre-market. So it's the 5-minute. So you can assume at least like 3 minutes on the 1-minute chart were just bearish, and then the last 2 minutes it creates this upward slinging. I wouldn't say hammer, but this would be considered a bullish shooting star on the 5-minute, right? So like just being realistic, if anything, I'd be looking for just zones of where it tests. And if anything, what held pretty well would probably be the order block at the bottom of this whisker on this bullish candle pre-market. And it didn't go anywhere below that, right? So I can run the next candle, and you can see that there was another manipulation. So for the majority of the first part, there was just this downward momentum creating this large bottom wick, and then it consolidated completely upward within the 5-minute. And you can see that it is very bullish as of now, just looking at the chart with these two large green volume bars. But something to pay attention to on the 24-hour volume is that volume is trickling downward. So in terms of just price action relationship, in terms of price action patterns with volume as well, if there is a decreasing volume, meaning less participants in the market over time, and there's a trend in price action upward, you can just assume that there is a buy side imbalance going on with less market participants. And that's not an assumption. I don't know why I said assume, but that's exactly what's going on. I said assume because that just means it's more risky, because all it takes is just a larger bar to come in of volatility, but just that larger bar being seller imbalance, meaning that there's a large imbalance of sellers in terms of just more market participants entering the market. But so far from these two bars since market open, there have been less participants and a buy side imbalance, right? So we see this order block form at the top, this bullish sentiment, this bullish momentum slash sentiment is being tested right here, but there's no confirmation from any of my indicators saying that this is bearish. So I could just assume that it could run for another candle, right? I could be completely wrong. Okay. So it ran for another candle. I could say that I made a certain amount of money within, say, if I was rich, I had 150 shares of QQQ. If you don't like that projection, the risk to ratio on that is pretty freaking horrible. I'm not gonna lie. If I'm only going in with a few grand and I'm getting out in 5 minutes for only a measly $70. So I'll just probably reset. I'll clear it and I'll put it at 5 shares, whatever, right? Just make it just seem more realistic. Run another 5 minutes, and we see this fair value gap being formed here. Fair value gap being a 3 candle pattern from the top of the range of the first candle and the bottom range of the third candle. And just a fair value gap, just to give a preface, it is a concept created by a day trader named ICT. Just to give some idea on where I'm getting these concepts from, right? ICT, for example, he created the fair value gap, and it just gives you an idea of what is considered here, for example, buy side imbalance, sell side inefficiency. So what you see is this imbalance of buy side participants and then an inefficiency of sell side participants, right? So if anything with a fair value gap, you can assume that this is just going to be a level or zone, because it's a large area rather than just a line, which would be a level of support. Worst case scenario for anyone who's using fair value gaps is this level being completely dismantled with some bearish momentum. But what you can assume is if there's going to be any test of this level, it will be a halfway 50% mark where price can test downward 50%, right? So we can see it trickling upward. Relative strength index on the volume inflow chart is flat, meaning there's really nothing going on. And then on the 24-hour volume, you can see it flat. And this is market open, so it's just pretty normal for it to be this flat. So you can see here, like I said earlier, this fair value gap got tested. I can assume that we're going to go on a run, right? It's just going to trickle back up after testing this zone. Was I completely wrong? I was completely wrong. I'd get out and sell with a loss of 70 cents because that's kind of scary. 5 minutes of that, if this is an options contract, just to be realistic, that'll probably be a few $100. I'm not going to lie. So I'd get out there. Thank God I got out because I would have lost a lot of money. But you can see RSI pointing a little bit downward. What's cool about using an RSI indicator is you can kind of just track it or just make a projection on where it's going from the initial angle it's creating on the indicator. And then from here we get a red bar pulling up. So I'd probably say I'd give it one more candle before I assume a confirmation on bearishness. And thank God I didn't do a sell order there because I could have gone the red, right? But this elephant bullish bar breaking through the halfway mark of the fair value gap that was previous there, that kind of indicates that we're fairly bullish at this moment in time, right? So I'll take that $7 profit. I'm only in for 5 seconds on a contract. If that's a $7 profit from a swing from 477.68 all the way to the top to 478. That's a few hundred. That's like $100 depending on how much you put down on a contract, on a 0 DTE, for example. 0 DTE being the contract expires the same day session, right? So just to get out there to be safe, we see an order block form at the top of this, meaning there's a zone of liquidity above these two candles that's just not allowing price to be traded above it, simply because there's a level of external liquidity being liquidity above current price, and internal liquidity being below current price. This zone right here like flattens this, which I could just assume that there could be a a break even, essentially just a balance of buying and selling, because these bars are pretty much where price traded for the past 10 minutes, and they look exactly the same, staying in the same range, right? I could be risky. There's no confirmation here, but it's just assuming, right, that because this order block on external liquidity was created, and it pushing downwards just to test the previous fair value gap, that we're now signaling for a downtrend. I can get out here with a $3 profit, but who wants to do that, right? Okay, so thank God I didn't get out there, because I would have gotten FOMO, right? If this was an actual trade, I'll take the $11 off of 5 shares. That's a quick swing for someone who's looking to put a certain amount of money in, right? But no one cares. This is just a test, right? Okay, you can kind of see this bullish wedge form after this zone of liquidity being tested. I can kind of draw from the bottom of this candle all the way to the top of this bullish candle, kind of just a pennant here. And a pennant from an upswing, and it's like just a downward pennant, it would be considered a bullish pennant. So from this pennant, I'm not saying that pennants are 100% reliable, especially on shorter time frames. This could just signal that we've done a complete reversal, given that this candle had somewhat of a 180, but still this is a bearish engulfing candle. So there could be a lot of bearish momentum left, right? The previous candle is a bearish hammer candle, meaning this bullish momentum here in this 5-minute really lost its momentum. So I can kind of assume, just maybe, I'll be in the next trade for 5 minutes just to test it off of this bullish pennant forming, right? So let's see if I was right or wrong. Okay, 7 cents. I'm going to sell because of what this candle formed. And this candle formed a candle of complete balance, meaning the open and close is completely in the middle of the top and the bottom of the whiskers. And in terms of bearishness, I can kind of get an idea that this isn't a pennant anymore, even though it sits in the range of a pennant. But let's open the next candle. I'm assuming it's going to be bearish. It's consolidating at this level, so anyone who's looking to make a trade next Monday, this would probably be a zone that you could mark out, because price at the beginning of the day just consolidated mainly around this area here, and that would be a zone from 477.88 to the bottom of it being 477 flat, right? So just from that alone, I'm going to assume we're going to do some sell orders, because we're looking fairly bearish. I'm down 9 cents. I'm up $2. I'm up $1. The consolidation here, those two top wicks hitting the top of the zone that I drew previously, meaning that the zone above here with this order block not being tested whatsoever at all, we can assume that bearishness is pretty much on the trend of the market. In terms of volatility, trend's picking up, but it's not picking up towards our favor. It's kind of staying flat. But it's staying flat on the other side of the MACD, but with an overall downtrend. As you can see, that volume was this high, and there was a swing upward on volume flow, but then it just breaks this upward trend and just flattens. So I can just assume for the next few minutes we can be bearish. So I'll take that. I'll take that. I'll be in the trade for 10 minutes, and then I'll take that. Just that initial pullback. Anyone who's looking to get in, they can see that this is an order block forming that touches the previous 3 candles for the 15-minute. If there's anything tested, I can draw a line here where an order block forms with these two bearish candles, and where that bullish fair value gap between this candle and this candle was, but it just got erupted. It got destroyed. So I can take the risk, and I can sell one order. I can buy one order, and buy another order, and just take profit and leave, say, one contract in, for example, just in case it breaks, pushes upward again. See, so thank God I took profit. Smart to take profit throughout the day. Sell that, buy that. So now that this level has been tested, you could assume that this is now support level as price trickles back into this key zone that I have drawn just from noticing that price has been consolidating here majority of the day so far, right? You see a bullish fair value gap form. If anyone's trying to be risk adverse, they'd wait for this fair value gap to be tested again before entering long if they're bullish. But it seems like price is not going to do that, but it's going to break out towards the upside of the zone I drew. And as soon as it breaks out, it gets drawn back to the zone. It doesn't seem like this zone of liquidity is helping at all. So you see that fair value gap be tested again. I'm assuming that there's a lot of bearish momentum, because this is a bearish engulfing candle, right? I'm going to do some sell orders here. I could be wrong. Fucking tits, I'm wrong. Okay, I'm right. Okay, I'm right. I'm wrong. I got greedy. I will sell that because the confirmation on that initial trade is being broken. This bearish candle doesn't seem to hold any weight towards this very large bullish candle. But we still are on a downtrend in terms of volatility, meaning that this candle is showing a buy side imbalance on low volatility. I'd say right now would be a good time to just get out and then just see what forms next, right? Yeah, we're fairly bullish, I think, right now for the day. Could be wrong. I'm in this trade for probably 45 minutes now, about an hour. And maybe we might be bullish for the entire day of the 14th, right? I'd say from that sell side imbalance, if I'm being completely realistic, I can draw an order block here. I can see that this order block with the past like 45 minutes where these candles were drawn, the top wick of those, it's kind of resting in this zone of liquidity. Draw another line, see if it picks a direction. Something I like to do as well is look at current trends. So we can draw a parallel chart from the bottom here, touching the previous low to these highs, and we can draw a hexagonal channel, saying that there's a new trend forming within it. So what's cool about this thing right here is it can either pick the trend it's currently in, or it can form the new trend that it's created with the previous 5 minutes. So you let that run, right? So it seems like it's picking the trend that it's currently in, and then I can hold my buy orders I'm currently in. If anyone see that one of the buy orders was, I'm assuming is right here, so I can wait for it to test it again, right? Testing it again, and I'd probably get in a little bit more, simply because it's not showing any imbalance. And keep in mind, I have no clue what's going to go on here, even though I traded today. Yeah, there you go. So you see now, right, it's picking this trend, and this is a risky spot to be. Luckily, say I held through those 5 minutes where it formed that bottom whisker, and I was like smoking a cigarette because I was scared, right? So I'll just get out because it's clearly not picking, or evidently picking, which trend it wants to pick up on. If anything, it's consolidating in the current zone it's in, right? So I'm just going to wait for it to pick a trend. If I kept those sell orders, I would have been in the money for sure right now. But since it would probably be too late to get in short, you can look for an upward doji candle like right here, right top of this candle right here is signaling a reversal, meaning that this bearish momentum it previously had a complete balance the price on this 5 minute, where the open and close is pretty much exactly where it was. And I could probably go long from here, I'm assuming, given that there's external liquidity with historical data showing that price has been here before, meaning you could test this level guaranteed. Holy fuck. Oh, boys, for the next 2 minutes, I'd be down a few $100s if this is options. You can kind of see, I wouldn't get scared here because I'm getting more data, right? This level is holding. Shooting star, bullish shooting star, even though it's a bearish candle. There we go. Let's get back to where we were. There we go. Right. So now price is sitting in this zone that we're in, and there's a new trend currently being created, right? Hopefully you guys are learning. I hope so, right? Angle trends are nice. I use those for moving average divergences. But here's a new trend that I picked up on, and that would be probably from the bottom of here over to the bottom of the skirt of that, and then looking like that, right? But the bearish of this would probably be from the bottom here, right? And then I move that like that. So now it's in another channel, and it gets to pick which channel it goes. That's the strategy you can use. It's not the only strategy I know, but there's a few strategies. But it seems as of now it's picking the bullish channel zone of liquidity. That's it, right? But I'm losing money as of now. We can let this run